The Bank of Ghana has pledged to monitor the changing financial landscape and put in measures to assess financial vulnerabilities emerging in other African Continental Free Trade Agreement member countries. Now, this will enable it to ring-fence any spillovers on domestic banks and financial institutions. Speaking at the Presidential Ball and Ghana Credit Excellence Awards of the Chartered Institute of Credit Management, Director of Banking Supervision, Osei Jesse, said the bank will also work closely with sub-regional institutions such as the College of Supervisors of the West African Monetary Zone to undertake cross-border joint supervision of banks and their subsidiaries across the sub-region. We have more in this report.
Speaking on the topic leveraging Africa Continental Free Trade Agreement to boost Ghana's socio-economic development, the role of the financial services sector, the Director of Banking Supervision at the Bank of Ghana said AfCFTA has given credence to the recapitalization of the banking sector. According to him, for the financial sector to take advantage of expected economic expansion that will be unleashed by the full implementation of AfCFTA, financial institutions need stronger capital bases to undertake large cross-border transactions.
Lowering tariffs under AfCFTA is only the first step. The subsequent steps of substantial policy reforms on non-tariff and trade facilitation measures will require strong commitment at the national levels. On a positive note, the opportunities and benefits that will accrue from AfCFTA agreement can be leveraged to implement the additional reforms needed to make Africa a competitive destination in the world. In all these, Ghana stands to benefit as a member of AfCFTA if we can develop the needed competencies to expand the manufacturing and agro-processing base, driven by high quality and competitively priced products. These activities will be instrumental for the accelerated growth and development agenda of the country. Ladies and gentlemen, the bank's monetary policy decisions have aimed to contain inflation within the medium-term target band.
Mr. Osei Jesse also urged financial institutions to focus on innovative and cost-effective trade finance products that will attract businesses across the sub-region to accelerate growth and development on the African continent. Executive Secretary of the Chartered Institute of Credit Management, Ejape Amu, urged financial institutions to pay attention to credit risk models and systems in this era, since credit is the heart of the financial system.
In terms of technological infrastructure that may require upgrades and harmonization to support cross-border trade. This diversity can constrain trade facilitation, and therefore, Afrexim Bank has rolled out a Pan-African payment and settlement system as the first centralized payment market infrastructure for processing, clearing, and settling of intra-African trade and commerce payments.
Meanwhile, FBN Bank won the Bank of the Year award, whilst Fido Money Lending, MTN Mobile Money Limited, and Abi National Savings and Loans were also rewarded for their excellence in credit management.
We are trying to encourage all these institutions to ensure that they give more attention, they pay more attention to credit risk management systems or processes, because credit is like the heart of the financial sector, and therefore we are appealing and encouraging them to pay attention to credit risk management systems, so that at the end of the day, their organization will become liquid. Because if you're not liquid, you cannot give loans.
There were also conferment of fellowship and honorary of individuals to the Chartered Institute of Credit Management. Credit risk constitutes 70% of the Basel I risk in banking operations.